Hi guys, it's Stock Curry, and I'm going to give you my prediction on where I see the market going over the next few days, including how I think the market will trade intraday on Wednesday during the FOMC meeting and Jerome Powell's speech. So let's get into it. The market just finished one of its best months ever in January. This was literally one of the best Januaries in the history of the stock market. And one of the reasons the stock market ran up so much in January has to do with the fact that a lot of people think the Federal Reserve is going to start cutting rates at the end of this year. Now, I'm going to go into a little bit more detail on that a little bit later. Of course, there were some other reasons why the stock market ran up in January. One of it was a little bit of a short squeeze. And then another reason is just the fact that during a bear market, we have a whole bunch of these smaller rallies that take place. Even after the major rally in January, we're still not even up to the December highs. So it was a really, really big rally, but not huge when you start looking at a longer term picture. But let's take a look at what the Federal Reserve is expected to do tomorrow and how the stock market might trade tomorrow during the FOMC meeting and Jerome Powell's speech. The case is growing for a Federal Reserve interest rate cut before the end of the year, but the question is why? Participants in CNBC's Fed survey think that rates are going to top out after the March meeting at around 5%, and then they're going to drop by about a quarter of a percentage point by the end of the year. The Federal Reserve's path on interest rates is pretty clear over the next few months. A 25 basis point rate hike is coming on Wednesday, and there is likely to be one more 25 basis point rate hike at the next meeting. But after that, the disagreement between the market and what the Federal Reserve is saying begins. 100% of respondents to this week's CNBC Fed survey expect a 25 basis point rate hike on Wednesday, and 82% think the Fed will raise rates by another 25 basis points at the next FOMC meeting in March. But why will the Fed possibly lower rates by the end of the year? Now, this is where there's a lot of disagreement among economists, and actually about half of the survey people think that the Fed is going to lower interest rates by the end of the year, while the other half think that the Fed is going to maintain this 5% interest rate through the end of the year. And somebody had put in the comments yesterday asking, why is it that people were so convinced of a recession by the end of the year? And now, just 1 month later, people seem to not be so convinced of a recession anymore. And what's really interesting is that if you look at the fundamentals of the market, if you look at the fundamentals of the economy, everything still points to a recession. Nothing has changed fundamentally. All of the fundamentals still point to a recession, but the market, the stock market, with this major rally, literally just the reason that the stock market has rallied is what's causing people to think that we might not have a recession. I know that sounds crazy. I know that sounds ridiculous, but a lot of people think that because the stock market rallied in January, that a lot of people are predicting that company earnings are going to go up. They're going to have these huge 12% profit margins. But the fundamentals point to a completely different picture. In fact, the fundamentals point to the complete opposite picture, in that when you look at the inverted yield curve pointing to a recession coming up, you look at the economic slowdown that we see in a lot of the forward-looking numbers, it all points to a recession by the end of the year. But the market is ignoring all of the fundamentals right now, rallying, and literally because the market is rallying, this is causing people to think that we might not enter a recession. It doesn't make a lot of sense mentally, but that's just kind of how people are right now. And that's why economists are split 50-50. Will the market avoid a recession like the stock market predicts it will? Or will the economy enter a recession like the fundamentals say it will? That's the big unknown. And what makes any prediction for anything past this week extremely unknown. And because a lot of the data is half good and half bad, really any predictions on what's going to happen this year are just guesses. All of the backward looking data, which tends to be a lot more comprehensive, such as the official economic data, the official GDP, the official jobs data, all of this, it's a very comprehensive approach. And because of that, it tends to be a lot more accurate. The downside is it's also very backward looking. It's delayed by anywhere from 1 to 3 months. The forward-looking data, the data that's a lot more current, points to a slowdown in the economy. But the problem is it's just one data point here and one there and one there and one there, and it's not a very comprehensive approach. And so until that data becomes more comprehensive, which won't happen until the data is already 2 or 3 months old, we are not really going to have a clear picture of what the economy is doing. And this is where the questions come in about what the Fed is going to do. Will the Fed look at the forward-looking data and say, okay, a recession is starting, we need to start lowering interest rates? That's what the market's predicting. Or will the Fed look at the historical data and think, well, the economy's still strong, jobs are still strong, inflation is still coming down, it hasn't reached 2% yet, we need to keep interest rates elevated, and that in turn triggers a recession? That's the great big unknown right now, and that's what has so many people up in arms and just fighting over what is actually going to happen this year in both the economy and the market. Now, some people who think the Fed is going to cut interest rates by the end of the year, they look at the fact that inflation is coming down across multiple indicators. We talked about this in yesterday's video, how inflation's been coming down for the past 4 months in a row. In addition, the latest data this week has been encouraging. Everything from the employment cost index showing a wage growth easing to the Fed's preferred measure of inflation, the PCE, that also cooling. And also GDP is holding up better than expected. So all of it points to the possibility that a soft landing might actually happen. And this idea of a soft landing is one of the major reasons why we saw the stock market rally in January. But consumer spending is down over the past few months as well, which is complicating the picture as far as progress versus inflation versus an economy tipping into recession. Fear of a recession did dip in the latest Fed survey, but it's still elevated, with 51% of respondents expecting a recession. And all of this has caused the stock market to become extremely bullish this month. But the Federal Reserve historically has been giving a completely different picture. In fact, the exact opposite picture of what the market is pricing in. And tomorrow, when Jerome Powell speaks, this could cause the market to wake up. Federal Reserve Governor Christopher Waller said the market has a very optimistic view that inflation is just going to melt away. We at the Fed have a different view. It's going to be a slower, harder slog to get inflation down, and therefore we have to keep rates higher for longer and not start cutting rates by the end of the year. So the Federal Reserve is very clear in what they're saying. They are saying they are not going to cut rates by the end of the year. The market basically is calling the Federal Reserve a liar and thinks that the Fed is lying and that they, in fact, will cut rates by the end of the year. Now, tomorrow on Wednesday, we get the FOMC meeting, and we also get some comments from Jerome Powell, and he's also going to answer questions during the Q&A portion. Now, the actual results of the FOMC meeting will be released at 2 p.m. Eastern Time, about 2 hours before the market closes. And then Jerome Powell speaks 30 minutes later at 2:30 p.m. Eastern Time. His speech will generally run for about 10 to 15 minutes, and then he will start answering questions. Now, Jerome Powell's speech is actually released ahead of time at the 2 p.m. release of what the Federal Reserve is going to do as far as interest rates and what they are going to do as far as quantitative tightening and selling off some of their assets on their balance sheet. Now, the way the stock market typically responds is generally at 2 p.m. Eastern Time on the nose. when the results of the FOMC meeting come out and the Fed does this 25 basis point rate hike, which they are expected to do, the stock market will typically rally for about 1 or 2 minutes because it's kind of breathing a sigh of relief that the Fed is going to do what the market is expecting it to do. Then the stock market typically sells off a little bit and gets back to around neutral before Jerome Powell speaks. Now, when Jerome Powell speaks for the first 10 to 15 minutes when he's giving his actual speech, we typically see the stock market sell off because the stock market is saying, whoa, his written statements are saying they're not going to cut rates by the end of the year. And that's not what we were hoping for. And now everybody's mad and they start selling off stocks. Then when Jerome Powell starts answering questions, we will often see the stock market start to rally again as Jerome Powell tries to calm the markets and prevent just a major sell-off. Jerome Powell wants the markets to go down, but he doesn't want the markets to crash. And so during the Q&A, he typically says some things to try to calm the markets a little bit. And this is why we see the stock market go up. So that's generally how the market will play out on Wednesday. By the way, leading up to the FOMC meeting, the market will usually rise a little bit or trade fairly flat. It usually doesn't go down, though. And if it does go down, it usually comes back up to neutral. Now the question is what happens on Thursday? And if the Fed comes in and does something or says something that the market really likes, we could see the market rally on Thursday. On the other hand, if Jerome Powell really takes a hard stance and he remains hawkish and the market does not like that, we could see the market sell off on Thursday. So Thursday is a little bit harder to predict. If I was going to take a guess, I would guess that the market would sell off on Thursday as they start to wake up to the fact that Jerome Powell has no plans to cut interest rates by the end of the year. But that's just a guess. Thursday could go either way. Now, Friday all comes down to earnings. There are 3 major companies reporting earnings Thursday after the close. That includes Apple, Amazon, and Alphabet. And depending upon how those earnings are, we are going to see a massive market move on Friday. Now, as far as a prediction for earnings, the best way to predict how those earnings might come out is to take a look at Snapchat. Snap has a lot of the revenue coming in from advertising. So if Snap's revenue goes down from advertising, very often we will see Amazon especially drop because their advertising goes down. We'll also see Alphabet drop because their advertising goes down. Apple is a lot harder to predict. And keep in mind, Apple's actually the largest company, the biggest mover on the market. But if Snap's earnings are low, then we can often see Alphabet and Amazon's earnings come in low as well. So let's take a look at Snap's earnings and see how they did. Snap missed on revenue in the fourth quarter, although they did beat on earnings, but their shares plunged on their weak revenue as they again declined to provide a forecast. Snap said the slowing economy led numerous companies to slash their digital ad budgets. Snap shares were down over 14% after the close. So based upon Snap's earnings, my prediction's pretty clear. I think we're going to get a major market sell-off on Friday. That would be my prediction. I think Alphabet and Amazon are both going to drop after they report earnings. Again, Apple, I have no clue on, but I think Alphabet and Amazon are both going to drop. I think they're going to miss their revenue expectations because ad revenue has gone down. And I think that's going to cause a drop in the prices, which in turn is going to cause the whole stock market to drop. Now, the one little caveat to this is, let's say Apple has this amazing quarter and beats expectations across the board and their stock rallies. Because Apple is such a large portion of both the S&P 500 as well as the NASDAQ, we might see the S&P and NASDAQ trade flat if Apple has great earnings and Alphabet and Amazon have poor earnings. So just keep that in mind a little bit. But if all 3 report bad earnings, I would expect the stock market absolutely tank on Friday. Now, I also wanted to remind you that if you want to know what earnings are coming up, and especially if you want to listen into the earnings calls, that all of this information is on the Moomoo app. Moomoo has an earnings calendar. And on that Moomoo app, you can see what earnings are coming up. You can also listen into the calls directly on the Moomoo app. And you can also set up alerts for the earnings in your alert section in your calendar on Moomoo as well. And you can get all those great features for free. All you have to do is open an account. I did also want to let you know that if you do open an account and you deposit just $100, Moomoo is going to give you 10 free stocks worth up to $10,000 just for opening an account and depositing $100. And if you open an account and deposit $1,000, Moomoo is going to give you 20 free stocks worth up to $20,000. If you want to take advantage of that and get those free stocks, all you have to do is open an account using my link in the description below. It's stockcurry.vip/Moomoo. That's stockcurry.vip/Moomoo. And speaking of that Stock Curry website, I also wanted to let you know that we are launching a free newsletter that will go out starting this Monday. In that free newsletter, I'm going to be giving you a recap of everything that happened the week before. And I'm also going to be letting you know everything that you need to know before the stock market opens on Monday. This is going to tell you all of the economic news coming out for the week, all of the earnings that will move the markets this week, as well as my technical analysis and how I think the markets are going to move this week based upon the technicals. That is a free weekly newsletter that will be going out every Monday morning. If you want to sign up and grab that free weekly newsletter, all you have to do is go to my website and sign up. The link is stockcurry.vip/newsletter. That's stockcurry.vip/newsletter, and that'll get you access to the free newsletter that will be going out starting this week. If you got a lot out of this video, then be a good friend and share this video with your friends and family so that they will know what's going on in the stock market as well. And don't forget to hit the like button and subscribe. And I hope you guys have a lot of success trading. If you missed my analysis of the market yesterday, make sure you go watch the last video here because it gives you a lot of insight into what is happening in the stock market. That last video will be posted right here for you.